to abroad and now to our wallets. As far as tomorrow is concerned, good news is actually bad news. And here's what we mean by that. At 8:30 Eastern, we get the latest jobs report. According to economists, the U.S. economy likely added 272,000 jobs in June. And meantime, the Fed is raising interest rates to cool the economy, reduce the amount of things we buy, and hopefully gain control of those rising prices. So the bottom line here. If we get a blockbuster jobs report tomorrow, and normally that would be great, the Fed is likely to say the economy is still burning way too hot, and that will result, likely, in more big interest rate hikes for you and me. Scott Bauer is the CEO of Prosper Trading Academy. Scott, thank you for being here. And normally these jobs numbers are so important, but right now the most important measure of the economy is probably inflation. In your eyes, what is the best case scenario for tomorrow?
Well, as you said, we're in a bad news is good for the market, good news is bad for the market scenario. I think best case is we want to see a number probably a little bit lower than what the expectations are. And that expectation that you had talked about around 270,000 or so, that number is lower than what we saw in May, which is 390,000, but that is what is expected. And the reason I think we need to see a little bit lower number is twofold. Number one, even if we get a lower number, let's say 225, 250, that is still pre-pandemic a very strong market. So the labor market still would be strong. However, on the flip side of that is it's not too strong of a number where the Fed's going to look at that and they're going to say, wow, we are still in this really hot environment here. We've got to keep the pedal to the metal. We've got to keep the activity and the acceleration on raising rates. I think the worst thing that can happen, and this is, it's so counterintuitive because we want to see as many jobs created as possible. The worst thing that can happen overall is we see a really strong number, 300,000, 400,000, 500,000 jobs created, which you would think would be a great thing, because what that's going to do then is help make the decision for the Fed at their next meeting, which is 2-3 weeks away. Not only are we going to, probably see a 75 basis point interest rate hike then, but then they'll probably keep accelerating those rate hikes. So it's going to be a very touchy number tomorrow. Definitely, in my opinion, the good news, bad news, bad news, good news scenario.
And to what you're alluding to, in normal times, we do hope for a ton of new jobs. We do want people working. These, of course, are not normal times. The Fed will also be looking for signs of a slowdown in this report, which is strangely the good news we'd be talking about. Are we likely to find any of those signs, though?
I do think we'll see a little slowdown, but I think we have to look a little bit deeper than just the sheer number tomorrow. Something really important is going to be wage growth. Are we still on a path where employers have to pay their employees more, 3% more, whatever it is, to get them to get into work? So I think what the Fed really is going to be looking at, in addition to just that sheer number, is what is that wage growth number? Because if that wage growth number is still real hot, 3% or so, again, that is not good for inflation. That feeds right into inflation, which then again will feed into the Fed's decision about their determination for raising interest rates going forward.
All right, Scott Bauer, thank you for breaking that down for us. And I do also want to say thank you for your work with the Lori S. Bauer Foundation. We know it is helping so many of the families in grief after the mass shooting in Highland Park. We certainly wish you and all of them well. Thank you.
Thank you.